The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
Welcome to the Accunet Mortgage and Realty Show. I'm David Wickert, Chief Millennial Loan Consultant at Accunet Mortgage, and joining me today is loan consultant Tim Holdman. Good morning, Tim.
Good morning, David. Glad to be back.
Yeah, back at it. Dad's going to be back in the saddle next week, so I'm going to miss you.
It's the end of our run.
We'll kick him off
weeks.
from time to time.
Yeah,
all good. Sure. If any of you out there have a question or comment, you can call or text us on the Accunet Mortgage Talk and Text line. That number 414-799-1620. So we're going to kick off today's show. So we're going to give a reading on an update on the trade war and kind of global economic news. What's impacting what or not impacting anything at all. I also want to
affect mortgage rates.
Yes,
indeed.
That's what
this is about.
Home ownership here in southeastern Wisconsin. Also want to talk about a story with regards to we are living in our homes for longer, and there is a study by Redfin pointing out as much. Also an article talking about cash out refinances. I'd like to talk about a customer of mine buying a home from their parents' estate, as well as Tim catch up on you helping a nice lady buying a home in retirement. So,
yeah.
But I want to kick things off by revisiting. For anyone who forgets, I am happy to remind you that economic uncertainty or economic poor news or less than stellar news is good news for mortgage interest rates.
Correct.
Because where there is fear or uncertainty, normally what happens is money managers pile into, quote, safer assets. One of those things is mortgage-backed securities.
Yep.
I don't think I'm making this up that among the safest assets in the global economy, number one would be U.S. Treasuries,
Sure.
if only because you're like, hey, if I lend money to Uncle Sam, do I think I'm going to get my money back?
Probably.
Yes.
Yeah.
And second behind that, or in that second tier, that second level, is mortgage-backed securities.
Absolutely.
So that all has to do with, okay, so this week, guess what? China and the U.S., we kind of still can't figure out how to work out this whole trade war thing. And just to keep it simple or summarize it, since the beginning of the Trump administration has continued to dial up and tack on tariffs on Chinese goods to the tune of anywhere. China is sending anywhere from $200 to $300 billion worth of goods.
They're a pretty big
to our
economy
shores.
last time I checked.
Yes, well, and hey, guess what? They want to sell things to Americans, and we want to buy them.
Absolutely.
And what the Trump administration has tacked on, a tariff is fancy international lingo for tax. Hey, you would like to send this refrigerator from Shanghai to San Francisco? We're going to tack on a tariff to that good. So that there has been escalating tensions over the last years, months, and it looked like there was going to be some kind of thawing. Is that a word? Thawing in
Sure.
In those tensions.
Which that good news initially caused interest rates again to creep up a little bit.
Right,
because
guess what?
Good economic news.
Yes, good economic news or good economic certainty. Hey, what might the world look like here in at least the short term? Caused rates to rise. And what has occurred is if I'm reading the tea leaves of this political thing, is they're trying to get a first win. It's like if you're a football team and you've gone 0-7, man, you just want to get the first one. Good, bad, ugly. We just want to be 1-7 and not 0-7.
The Miami Dolphins of trade negotiations.
Exactly. And so there, about a month ago, there was this initial, I'm going to call it the agreement to agree. We are going to agree on some kind of resolution. Phase 1 is what they've called it with regards to the trade war and trade tariffs. And hey, this week, guess what? They can't quite figure out how or where they're going to meet. They've agreed to agree, but now they can't figure out the details of agreeing. And I would imagine
to get it done before Thanksgiving, or at least to agree where to agree.
Right. And I think trade negotiations, like mortgage lending, I think the devil is in the details, and that the details matter. And so what that means for mortgage rates for folks buying a home or looking to refinance is that this uncertainty with regards to how, when, if the trade war items might get worked out. Guess what? Interest rates have improved this week. Hooray!
Yeah.
Because that uncertainty has led to consternation in financial markets. Because what if they don't get it figured out?
And which led to more people investing in mortgage-backed securities.
Which drives down interest rates.
Absolutely.
So at the close of the week, Accunet could offer 3.75% on a 30-year fixed with just $995 a cost. The APR is 3.77. That is with 25% equity. It's on a $200,000 loan. And
all the other right stuff, 740 credit.
Yes,
escrowing
for taxes. No second mortgage on that property that might be resubordinated, a fancy mortgage word. And boy, is that just attractive. That is like a Thanksgiving gift for us in the mortgage business. So for anybody who might be holding on to a four handle earlier this year or last year, let's connect, because we've gotten, I'm going to call it a reprieve in rates. So hopefully they continue to not figure out the trade war is my Christmas wish, but we'll see if that works out. All right, when we come back, I would like to dive into that Redfin study and story about people living in their homes for longer. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Hello.
And diving in after our macroeconomic financial begin to the show, I wanted to get into an article written by Daryl Fairweather on the Redfin.com website. Redfin is a national brokerage company. They're public,
if
by the
you've
way.
Googled a house looking at it, you probably see a Zillow page and a Redfin page for said house.
And they had an article out earlier here in November that, to summarize quite succinctly, that homeowners in 2019 had spent 13 years in their home. The typical American homeowner had spent 13 years in their home, and that is up from 8 years in 2010.
Yeah.
Yikes.
So people are living in their homes for a little bit longer than they used to.
And the second sentence, median home tenure, so not average, just, if you took, so median home tenure increased in all of the 55 metropolitan areas that Redfin analyzed.
Was Milwaukee in that top 55?
No, we're not cool enough.
Okay.
But
not quite there.
And for those who forget, median is take 55, half of those folks are longer and half of them are less. You just pick the guy in the middle. And so, for example, apparently the winner is Salt Lake City, that the median home tenure in 2019 was 23 and a half years.
Wow.
Which is a long time. My
time
parents stayed in their home for 17 years.
Pretty good run.
Yeah, 23 and a half. So guess what? That has some consequences for home values and home shoppers.
Because inventory specifically, because what that article is then saying is the logical conclusion of people staying in their homes longer is that, hey, guess what? The people who are maybe first-time home buyers, a.k.a. the millennial generation, there's not as many people looking to sell their homes because they're just staying in them longer than they have in the last decade.
Yeah, and the other macro trend is that baby boomers, or those of a certain age, are choosing to, the term of art I believe is age in place. That rather than head into a adult dormitory, as I used to call it when Grandma lived at Luther Manor, you get to hang out with a bunch of all your friends who are the same age. Boomers are hanging out at home because guess what? They like living at home. And I imagine I will too.
For sure.
There's just so many, so for example, I view this as, this is rough on home shoppers because your available inventory is dramatically less, and especially here in Milwaukee, because we don't have endless amounts of dirt to go build homes to maybe supplement the folks who aren't moving, who aren't creating inventory.
Right.
There's some construction, but not like in the sand states like Arizona and Nevada, for example. So it's like you are going to be subject to increased prices for the same house, not necessarily because the home is itself increasing in value, but because there just ain't a lot of them.
The demand is increasing, and therefore, I mean, simple supply and demand economics is that when the demand goes up, the price is also going to go up because there's more people.
Because the inventory is the
scrapping
same.
for the same amount of stuff. Yeah.
Yeah. Which, if you're a homeowner, Home Shopper, rough on Home Shoppers. Homeowner,
yeah.
Hey, fantastic. Like, we might have strong home appreciation kind of going forward, especially if folks choose to continue to age in place.
Right.
I think I don't want to warn people at overpaying or we are not in the business at Accunet Mortgage of trying to predict when home prices might go up, down, or sideways, either in a mini or a macro level. Yeah. It's just kind of scary when you're looking in certain neighborhoods. Like, I pick on Wauwatosa a lot.
Yeah.
But it's like, you're going to pay how much for that house? And you're hoping that by doing so, the home continues to appreciate in value. All the demographics would say as much.
Yeah. And, the article isn't all doom and gloom. I mean, this doesn't reference the Milwaukee area or even Wisconsin at all. Their numbers are based off of 4 cities in Texas and then Salt Lake City.
Those are the leading.
Those are the leading areas where people are staying in their homes the longest.
Although I'll tell you, we had sent out a email blast to all of Accunet's past customers that over the past, I'm going to get this wrong, 4 years, there has been 30% home appreciation in median price.
Yeah.
So if you are thinking about buying a home, what we invite folks to do the math with us on is, what if you wrote $1,000, $2,000, $5,000 over the asking price?
Right.
Because it's quite possible that getting in and kind of pegging the fixed costs of your house now could be economically worth it. Again, this is all within the context of nobody buys a home for financial reasons. You buy a house because we're having a third kid and we only have 2 bedrooms.
Right. And rates are good enough where historically, if you tack on, I think where rates are at, the math is that for every extra $1,000 you borrow, it's going to increase your monthly payment on a 30-year fixed mortgage by $4.
Yeah, $4 or $5.
It's not going to break the bank,
right,
even with home values being at the higher area that they are right now.
So if you're planning on staying in your home, I'm not sure I have a conclusion other than to just report that people are staying in their homes for longer.
Yep.
And that has good and sideways effects on home shoppers and home owners. So more to report on that perhaps as we noodle on that a little bit longer. But when we come back from this break, I would like to jump into another article, a little doom and gloom about cash-out refinances and also kind of the positives and negative consequences of the cash-out refinance. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. Getting into a segment here now about cash-out refinances and an article from Market Watch that kind of sounded a little alarmist as they're trying to put this surge in cash-out refinances in the context of the 2004-2007 housing bubble era. Dun, dun, dun.
Yeah.
And, what they note is that back in from 04 to 07, borrowers pulled out just under $1 trillion from their home in equity. And this was, in the lead up to the bursting of the bubble of the mortgage and home value world. And guess what? People are starting to do that again because, as we noted in our previous segment, home values are increasing because people are staying in their homes, and with less inventory, supply and demand kicks in, and home buyers want to bid up houses, and your neighbor then gets to benefit because you bought your house for more, and that makes their house more valuable.
And those people are like, oh, wow, our house is worth how much? Hey, we should pull
my
some
house
money.
is way nicer than my neighbor's house.
And
what
rates
are you
are
talking
still
about?
rates are still good, so maybe we should pull some of that equity out for a home improvement project, for credit card debt consolidation, for so that junior doesn't have to take out as big of a student loan. I mean, there's a million reasons that we hear about for why people would do a cash out refinance.
Yes, and I think so. I understand the need for headlines.
Yeah,
and I would want to drill down on a cash out refinance is not evil, and so. Just to be simplistic about it, a cash out refinance is when a borrower, let's say you have a $200,000 loan on your $400,000 house, you want to refinance and then extract equity, borrow against the value of your home.
Correct.
Maybe I had a $200,000 loan and now I want a $250,000 loan. That's a cash out refinance, extracting that equity. And so we have been helping folks do that cash out refinance. And I would say it really depends on the success of that cash out refinance depends upon what are you going to do with that money.
correct.
And so on the let's go to the positive side. If you take out some funds, I actually have a client doing this right now. They're extracting equity from their home so that they can go improve the value of their home. They're going to invest in a new bathroom and they're going to try to finish their basement and apply those funds that they're borrowing against their house back into the house.
Yep.
And they get to enjoy the improvements to the home as well.
Yeah.
But that is that would receive the blessing of any financial wizard that's just like, this is an efficient use of money because you are trying to improve the thing that you borrowed against. I think you noted maybe you are going to you're going to do a cash out refinance to help pay for college because you would rather do that than your child take out student loans,
student debt,
or possibly at a higher interest rate, or that's what you want to do as a parent.
Or the common math that I do for someone where if let's say they have $20,000 of a combination of credit card debt and maybe a car loan or some other kind of higher interest debt.
Yeah.
That is more of that value isn't going back into your home in any shape or form, and that can be a useful tool only if you don't go and then rack up $20,000 of new credit card debt.
Right. It's like, hey, I can
$0
drop your weight by 20 pounds.
Yeah.
But if when we do that, you then start eating donuts from Joey at Cranky Owl's every day.
Shout out to Joey at Cranky Owl's, by the way. Yeah.
But guess what? You're going to gain your 20 pounds back. And so that's I think this article might be pointing at that more than possible home improvement is if we give you a cash out refinance diet and then your diet doesn't change, that's scary.
Right. And, in 06, full disclaimer, I was 16 and mortgage rates and mortgages were the farthest thing from my mind at that point in my life. So I don't know what the rules were as far as how much equity you could tap into.
In terms of
because with the modern day rules that we abide by with Fannie and Freddie, you can only go up to 80% of the value.
So you still have a buffer.
Yeah, and I think that's a great rule, so that even if home values do go the opposite direction at some point in the future, you're not going to be underwater and owing more than your home is worth. And the other thing I tell people too is that home value only matters if you're trying to sell the home or refinance. If you're just living life, you could tell me right now my house is worth $10 and I really wouldn't care that much because
you need to live there.
Yeah, I'm not planning on moving anytime soon. So
cash out refinance can be a powerful tool.
Absolutely.
And some folks do need that reset if life slips away from you a little bit, and you can get a 20 pounds shaved off your life.
It's a powerful tool for cash flow consolidation, for sure.
Yeah, it's got to stick, because if it doesn't stick, you broke the piggy bank.
You can't abuse it and do 5 cash out refis in 5 years. And that's kind of what the fear of this article is saying, is that people are doing them at a much higher frequency.
Right.
And that can be dangerous, for sure.
All right, so those are your warnings on cash out refinances.
No more doom and gloom.
No more doom and gloom. All right, we're going to keep going with some good stories. When we come back, we're going to catch up, Tim, with your client and do a review on how to buy a house in retirement, because you can do that. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Hello.
And now on to a couple stories. Thankfully, we've had the past couple weeks some good home purchases to keep track of and get updates on.
Yeah.
And what I realized, Tim, this is for your client who, in retirement age, is going to be going from her soon-to-be old condo to her new one.
New, smaller condo.
Yeah.
Downsizing a little bit.
And what it reminded me of, for those who are retired, you can buy and finance a home.
Absolutely.
Just because you don't have I'm going to say a regular W-2, day job. Accunet Mortgage, using the manufacturing guidelines of Fannie Mae and Freddie Mac, can use things like Social Security and a pension and retirement income from an IRA, which an individual retirement account, which a 401k, when you leave your employer, gets rolled over into your own personal IRA as well. And for your clients, we were helping them. Well, let me back up. In mortgage lending, this actually goes back also to some of our make sense lending or nonsense lending topics before, because assets are really cool. Congratulations, you have $1 million in the bank. But mortgage lenders really care about income. Yeah.
They're both important, but they're important in different ways. They're two legs of the stool that you need to get a mortgage. You got to have a sufficient credit score. You have to have assets, and you have to have income. And with retired persons, sometimes the line gets a little blurred between what are we using for assets and what are we using for income.
Right. And so a cool thing that, Tim, you helped your home buyer do was create income.
Yeah. So anyone above the age of 59 and a half has an extra tool in their tool belt for qualifying for a mortgage, which is, and this is in my borrower's case, she had Social Security income and a monthly IRA distribution that she was receiving out of one of her IRA accounts. And what we did is, with her current income, she did not actually have enough qualifiable income to get a mortgage without selling her old condo first, which she is selling it, but not until a week after she's buying this new one, for the practical purpose of then she has a week where she owns both properties and can move stuff over at her pace. But in the eyes of the mortgage
and because
world,
mortgage lenders are mean, we have to pretend like, what if you never sell your
We have to pretend, what
home?
if the person who's buying her old condo, what if they get struck by lightning and she...
What if they lose their job?
Yeah, we have to treat it, what is her financial picture on the day that she closes on that new condo purchase? And on that day, she owns two properties with two sets of taxes, 2 HOA dues, 2 homeowners insurance premiums, all that stuff. So factoring all that in, she didn't have enough income with her current picture to qualify for that scenario.
Right.
So what she ended up doing and what we helped her with is we
took coordinated with the financial advisor
which is key, because anyone who's at or above retirement age, sometimes technology is not their strong suit.
Well, and you need the help of the financial advisor to tee it up anyway.
We got involved, and their financial advisor was great to work with, very fast and responsive. And we said, hey, Mrs. Borrower, you have an IRA account with, I'm going to make up a number, $300,000 in it. Congratulations. Okay. We are going to use that, and let's say you're taking $2,000 a month out of it right now. We are going to get a letter from your financial advisor saying, effective immediately, you're going to increase that monthly disbursement up to, we'll call it $5,000.
Okay.
That is
creating income.
Yeah, $3,000 a month of extra income. You just need to get one of those draws prior to closing so we can show that to underwriting and say, hey, look, this is her new income picture. Mm-hmm. They'll say, sounds good, you're approved. Then whatever she does after we close on that mortgage is no longer, frankly, any of our business. And especially after she sells her old condo, she's really not going to need that much income anymore.
Right.
So she can change it to whatever.
It's America. She can do whatever she wants the day after.
Wants.
She qualified that day.
Yeah, exactly. And realistically, that's probably what she's going to do. But for someone of that retirement age or above, they have that flexibility to move the income level to whatever dollar amount they frankly need to qualify for the mortgage. And that's a pretty cool thing, because for people our age, David, we can't just walk into our employers and say, hey, I know I made $2,000 last month. I'd like to make $5,000
Hey,
this
Dad,
month.
I'm trying to buy this $1 million house.
Yeah. Maybe I could do that if I leverage his grandkids, but I haven't tried that one yet.
So what I enjoy doing, I feel anytime that we help a retired person turn their assets into income, we not only blow their mind, but also sometimes their financial advisor's mind.
And other lenders don't really utilize this. Not all lenders, but some of them I feel like don't know about this tool in their toolbox either, even though it's in the Fannie Mae guidelines.
Right. Turning retirement assets into income. Mm-hmm. So
even if just for a little while.
Right. Proving that you could if you wanted to. That's the beautiful thing. So excellent. Good story there. When we come back from this break, I would like to jump into a story about buying a home from a deceased parents, and especially when siblings are involved. The interesting balance of money, family, and law. Nothing can possibly go wrong, right?
Yeah, it sounds like...
sounds interesting.
Sounds good.
You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
This is the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Hello.
Brian will be back in the saddle next week. Sad face. But we'll keep the millennial mortgage in our hearts.
Yeah, I'll come
Metaphor
back to
millennial mortgage.
to bring some youth to the show at some point in the future.
What do you think? Are you calling me old?
No. All right. Older than me.
Speaking of old, I would like to jump into a story about three siblings purchasing the home that used to be owned by their now deceased parents. And when you put ingredients into a cooking pot, such as money, family, law, it can be emotionally up and down.
All that's missing is politics. Then
oh my gosh,
really
and religion. I think that's called Thanksgiving, Tim.
Oh man.
Next
Anyway, week, here we come.
So I have been working with a family where three siblings. Father has passed away about 2 years ago. And the son and two sisters. The son has been living in the home of his deceased father and wants to buy that from his other two sisters. And
So they each inherited equal parts upon their father passing, and now the son, who's been living there anyways, wants to take over sole ownership?
Correct.
Is that the situation?
Correct.
Okay.
And so this is like one of those times, you know what Dad is really good at is he doesn't pretend to be like an estate attorney in this example, but he's an actor. You know, he's a thespian like me. He'll put on the hat and you know try to give counsel. Not because he's an attorney, and neither am I. But you have to, as a mortgage lender, you have to think like an estate attorney.
Yes, we wear many hats, and Brian is great at all of the
He's
hats.
got all the hats, and so do we. Come on.
And
so for these folks, you know what they're trying to figure out is, and upon my guidance as well, how do we get the portion that is due to the sisters,
right,
while also helping the brother become the sole owner of the property? And one way to do that is you could just outright purchase the home from the estate of your deceased parent.
Right. And then upon the purchase, would the estate then pay the two sisters their stake in the property?
Correct.
Right.
You know, and so think of it, you know, if you view it in terms of what if you were just selling it to a stranger?
Right.
And let's keep it simple. Hey, we're going to sell mom and dad's old home for $120,000. A buyer shows up at the closing table and, hey, here's the mortgage portion and here's my down payment. Here's $120,000. Give me the keys to the house. Now it's mine. And then you split it three ways between the siblings and 40, 40, and 40.
Right.
And what is still a mind meld for me is when you are one of the three siblings and you are attempting to purchase the home from your parent's estate, but use your third as the down payment.
Right, because you've already got a third stake in the home, or you would once the purchase is done.
Yeah. So the counsel that I think I'm going to see if I can provide, work with the attorney and then the siblings as well, is that because there have been some other expenses that I think have cropped up as they have attempted to settle dad's estate. And so the other way to help the son become an owner of the home is to draft a deed to transfer the ownership of the home from dad's estate to the three siblings and make them the three owners together to provide that continuity.
Yeah. At which point, and I'm probably jumping ahead of you here, but at which point our transaction is no longer a purchase. It is now a refinance.
Right, because you already own the house. You can't buy a house that you already own.
Right. And then you're just paying out the two sisters the equity that they are due.
Exactly. And so what we may be able to do then is, with the attorney's help, draft a buyout agreement.
Sure.
That, hey, we agree to quit claim. We three are owners now, and us two sisters agree to quit claim ourselves off as owners in exchange for payment of X dollars.
Yep.
And the other thing that you can do is you can also tie up. So let's keep it simple. If the sisters were going to be due $80,000, $40 each.
Yep.
Hey, what if we have it drafted for $90, so that $90 is paid out, $40 to one sister, $40 to another, and then another $10 to settle any other bills,
sure.
Right? Attorney's fees, any other creditors that have levied against the estate. I just feel as though that's cleaner, and I think in future years to come, it will be Accunet's mission to do more and more to work with estate attorneys.
Yeah.
Especially in situations where siblings or children or grandchildren want to hang on to the house. If you just want to sell it, well, guess what? You stick a sign in the yard and you're on your merry way. But when you want to hold on to it and hopefully do it in a non-contentious way,
right,
their advice is needed, especially when you're borrowing money to get her done.
Right, and as much as we just talked about the numbers about this scenario for the last 5 minutes, there's this whole other emotional side of this where three siblings are trying to work together,
right,
to settle,
honor their parents' legacy, and all that
jazz.
It's
a family home, and dealing with siblings already. There's already a lot of backstory there. I mean, there's just a lot of extra layers to this type of scenario that can be interesting, to say the least. To unpack.
Yeah. So I'm going to call Grace when we get off the air to make sure that everything's kosher between she and I in case, the day comes.
I think you guys, she doesn't badmouth you at home.
We'll be okay?
Like
okay,
so,
good. All right, when we come back from this last break, we're going to get in and do a refresher on the Rock Solid pre-approval, because guess what? Home buying spring season is right around the corner. I'm skipping winter.
Yeah.
So we'll cover that when we come back. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the last segment of the Accunet Mortgage and Realty Show. I'm David, that's Tim.
Good morning.
And I would like to conclude with a full-throated reminder of the rock solid, fully verified, guaranteed pre-approval.
Gee, David, what is that?
Yeah, you know what's fun is we've got someone new in the Accunet office, Jacob, who works right next to me. And I, this week, looked at him and was like, have I explained what the rock solid pre-approval is to you, Jacob? And he said, no, David, you have not. And so I suddenly, we have a bullpen style office, organization. And so everybody within earshot gets to start chiming in as I give my David shtick about the rock solid pre-approval.
To the blank slate.
Yes. And so what I did, I printed off for Jacob a credit verified pre-approval and had him read that. And then I printed off a rock solid pre-approval letter and I had him read that. And after he was done doing that for, 90 seconds, I said, tell me the difference between those two letters. And he said, well, this first one is, you verified credit, but just this is what you've told me about the rest of your financial picture. And this rock solid thing, it says we verified not only your credit, but also your income and your down payment. And I said, that's the whole shtick. And it's
verified with actual documentation, actual proof.
And So Dad created from thin air the Rock Solid pre-approval 5 years ago. And what is beautiful about the Rock Solid is its simplicity, because
It's not complicated.
there are 3 legs of the stool for getting approved for a mortgage. You need a credit score, income to pay back the monthly payment and support all your monthly debts payments, and a down payment, skin in the game, to participate in the purchase of the home.
Right.
And when you go to bank.com, what they'll ask you is put in your social, I yank your credit. What do you make? I make $1 million as the starting left tackle of the team in Green Bay.
I'm David
Awesome.
Bastiari.
Yeah, right. And I have $1 million in my bank account. Congratulations. We haven't verified any of that, but we believe you. Here's a pre-approval. Go out there and hunt for a home.
Yeah.
And guess what? All the devil is in the details when it comes to getting approved for a mortgage. If you called up and said, I have an accepted offer on a home, what Tim would say to you is,
Congrats.
Congratulations. Second of all, here's the documentation that I need to approve you for a loan. And what Dad just divined was, we should do that before
Ahead
you
of
write
time.
an offer on a house. Because
Shocking.
guess what? That reduces stress about knowing whether you can get a mortgage.
Yep.
And makes you much, much, much more attractive to a seller who only cares about, can you deliver on the goods?
Right.
And boy, when you verify more things, the things that matter when it comes to buying and financing a house, sellers love that because they don't want to feel nervous about saying yes to your offer.
And it makes us feel so good as the lender guys about our ability to get you a mortgage that Brian is willing to put his own money on the table in the form of a $2,000 guarantee. That's what makes the Rock Solid pre-approval Rock Solid. And it says that if we got all that stuff we asked for, and if we gave you the Rock Solid, and if you go out and get an accepted offer with that Rock Solid pre-approval, and if we screwed up in some capacity and couldn't deliver on what we said we could, we will pay that pre-approved borrower $1,000, and we'll pay the seller of that property $1,000 as well, which is something that we haven't seen from any other lender, especially in our area, but not really anywhere.
Nationwide, I wouldn't know where they were.
Right.
And so guess what? When there's not enough inventory, like we referenced earlier in the show, you as a home shopper need to be different, and you need to be stronger. And so what happens every year is you look across at your significant other at the Christmas dinner table, and you're just like, honey, I want to buy a home this year. And then it's off to the races after the first of the year.
Yep.
And the only way that you can either enjoy, let alone win, the home buying process is by being rock solid.
Absolutely.
And allowing us to do the homework to reduce the stress of knowing, can I buy this house?
And help you win out against the 3 other young couples who are trying to do the same thing and maybe aren't rock solid.
Yeah,
and
you bet.
We don't even charge anything for that extra level of pre-approval because
we want people to win.
Yeah, we want people to win so that we can do their mortgage.
Indeed.
And the Rock Solid pre-approval helps that happen.
Home buying season is right around the corner. Thankfully, mortgage rates remain favorable. If you would like to find out how much you can save by possibly combining a first and second mortgage together or lowering your interest rate on your mortgage already, or get started on a rock-solid pre-approval to buy, all you got to do is click on the blue button at Accunet.com. That is ACCUNET.com. I'm David. That's Tim. You have been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.